LiteFinance, the world of financial freedom.
Hello everyone, it's Monday, October 10th, and we are starting the market forecast. Let's begin with the topic of the US debt limit. Briefly, I would like to bring this topic a little closer to the exaggerated perception of people. First of all, it is one of the legating relics enacted in 1917. The limit itself was set completely arbitrary. It was not supported by any in-depth research to be able to realistically assess how much such a limit can be determined. So far it has been raised or suspended more than 110 times, and we still get excited about it as if the world really would end. The mere increase of debt limit does not cause the debt itself to increase. As for the US bankruptcy, the term itself implies the inability to repay interest or principal with interest. If Congress does not decide to suspend this limit, the government will only be limited to tax revenues, which on monthly basis there are more or less 7 times the interest that they have to pay on bonds. So the whole thing is just food for the media. Another issue is Powell's re-election on Fed's chief, which could happen this week or on the 13th exactly. Another thing was weak payrolls that came as a slight surprise as none of the indicators worked, nor the ADP nor the initial jobless claims, though the unemployment rate positively surprised. Its reading was better than forecast and the hourly rate, which was also positive. As we talked before, it shouldn't have any more influence on the decision on the November taper, and everyone is already looking forward for the next FOMC meeting. This week, the most important data will, of course, be minutes from the FOMC meeting on Wednesday, but we will also receive inflation data from the United States, UK, Eurozone, and Canada. Inflation on the side of US producers, which will be interesting, how the production cost was rising, and is there any risk of those costs being moved on final product prices. Additionally, retail sales from Canada, UK, and PMIs from Germany on Friday. Looking at the charts, starting from Euro USD, from the higher time frame, we are still in short despite the weakening of the dollar. Going down to H1 and M30, you can see other opportunities to get into the scalps to the upside, and this was what the situation looks like at the lower intervals. USD CAD is trying to break through the strong support. For now, it has every reason to do so. Good data from Canada and a weaker dollar is a perfect context for that. At the lower intervals, there is a descending triangle which may be filled today and the movement to the south would continue. Gold after the NFP has returned to where it started. The scenario does not change from my priorly planned, which is the trade on the inverse head and shoulders. Euro-pound is still short after such large drop on higher timeframes, and the same thing on the lower ones. We see even a retreat of the signal. The pound is overall very strong, also in tandem with the dollar. So okay, that's all for today. Thank you for watching and we'll see you next week. Bye.